से बातचीत करेंगे। the FIs with the, close to 3.2 lakh contracts on the short side, they got stumped out. But now, post the election verdict, they've come back big time. And now you adjusted, because of the change of the lot side. It's the highest that we have seen all the way since November. So net short market, normally you like, but this time around, the FI flows are going to be important. And the cash market flows, both the FIs as well as the domestic market. What about the clients? They have been getting it right. In fact, in yesterday's trade, the clients, that's the large HNIs and retail, they went ahead and they added long positions. So they increased their long positioning in yesterday's trading session, as you can see, from 1.9 to around 3.3 lakh contracts odd. And they have been getting right. So just want to put that on the table. And on stock, 3.3 lakh contracts odd. And they have been getting right. So just want to put that on the table. And on stock futures, actually, both the FIs, the clients, they are net long. 5 lakh contracts of the FI, net long contracts on stock futures. And also, if you look at, clients, close to 17.5 lakh odd, it was around 19 lakh odd. So they've, come down a little bit from the top. What are the levels you're looking at? For me, the 200 EMA is going to be very important, both on the Nifty as well as the Nifty Bank. Yesterday, we almost went to that level on the Nifty itself. So, that's the line in the sand. On the downside, you don't want to see the 200 DMA getting broken. Because that's where, in fact, you have the 20 as well as the 50 DMA. So that's the important mark as well. Just one point, yesterday you saw consumption themes, that's the FMCG themes, do much better than some infra-related themes. And in the last one, so you've seen a big low performance from the infra themes. And I was looking at a Nuvama note today. They're saying that the valuations of industrials, now they have, in fact, converged with the FMCG name, with in fact focus on consumption rather than capex. But do what's in your hands, and what's in your hands is your SIP. So maybe, in fact, keep that going, not maybe, keep that going and show faith in this market. It's in fact, for the longer term, things, should work in your favor.
Okay, well, those are the cues, and we'll keep analyzing them as we go along. Let's start with some calls that we're getting on the market. To begin with, Chitlangia of First Bases, who says that yesterday the USD INR rose to a high of 83.55, erasing all gains. He says despite near-term political uncertainty, macroeconomic stability remains comfortable with a healthy growth balance and correction in to 4.5%, and the current account deficit to remain at 1% of GDP in the current financial year. He says based on the big picture and the support by their bearish view on the dollar globally level, he says a rise above 83.78 could push it to 84.20.
Okay, well, on bonds, we have Ajay Magnolia of JM Financial, who says that amid the surprise and unexpected election result jitters, benchmark bond yields spiked by 11 basis points even this week. He expects the 10-year benchmark bond yield to trade in a range of between 6.98 to 7.07% today. Okay, well, Robert Socken is with us. He's global economist. He's joining in with some... the elections here, of course, front and center. What did you make of it, and if you've been able to speak with clients externally about what's happened here? What's the feedback and what's your own view? We'll also be, of course, speaking with the India economist, Samiran Chakrabarti, later in the day, but just a global sense on the elections here.
Yeah, absolutely, and very happy to be here. And as you noted, we had to digest the same news over the last 24 hours, which was very surprising relative to the figures we were seeing in some of the will be in power again, but failed to make that majority marker. And in fact, it seemed that they were going to significantly surpass that, some of the early figures. Now, I think in terms of here, broadly has been in a very strong place economically. It's been one of the best performers in the global economy this year, and in fact surprised us to the upside. We recently marked up growth for India. Long-term fundamental reasons to expect India's growth to be strong. So I think the underlying nuts and bolts of the economy are very solid. Election surprise does is it really throws some uncertainty into the mix about what the configuration of the government and what type of policies will be put forward in months for the years ahead. I think, broadly speaking, my sense is that the government does have some space in its budget for some additional spending, maybe on some more progressive policies targeted at increasing employment, maybe some policies targeted at rural areas. And I think the budget can withstand and support those initiatives. And then beyond that, I would expect many of the policies that the Modi government has pushed forward, such as policies to support manufacturing, technology. Speaking, I still look at the fundamentals as being in a very strong place. I think you're still going to get a lot of continuity with maybe some differences than what people were expecting before, but still a broadly supportive picture for the economy.
Robert, it's very early. I know we'll ask Samiran about this, but any sense on to what extent do you think will foreign clients and foreign investors be comfortable with a bit of a let up on the fiscal roadmap? Government decides to sort of tilt more towards populist measures and taxation, for instance. How will it be viewed?
Yeah, it's a great question. I do think there is some space within the budget, and the government has some fiscal room to explore some of those policies, and still, I think investors are likely to see that and recognize that the budget has been moving in a healthy direction, and the economy has very strong underlying fundamentals. They're going to continue to support this is going to evolve, but broadly speaking, I think once the shock of the change plays through, and we see coalition government with cabinet picks and with the budget, I think investors will still see it as a very attractive place to move capital. And so I do think over time that story is very much going to remain in place, and likely, given those under that for global investors, India equities and India debt can continue to be attractive.
But Robert, so you're not expecting a major move away from the current policies around manufacturing and capital expenditure. Is that what you're saying? The margins support the rural segment policy roadmap to interpret it?
That's my interpretation. Again, of course, it's early days, a lot of uncertainty here, but I would expect that those policies of supporting manufacturing are likely to continue to remain in place. Maybe some of the larger structural reforms within that place might be more delayed or changed at the margins, but I do expect that those policies to broadly remain intact. And I do think India has a very strong opportunity to benefit from the structural change we're seeing in the global economy, which is that companies and capital flows are looking to move away from China and towards other destinations. We see that in a very broad range of data, from what's happening with supply chains to global trade and capital flows, facing itself to be a large beneficiary of that rotation. And I think that's likely to continue to be a focus of the India government going forward, especially, again, with this opportunity to really benefit from that way from China that we're seeing that is very likely to continue in the years ahead.
Hi, Robert. Good morning. Nigel on this side, and good to see you in as always. And that was going to be my next point, right? You're looking fairly unruffled that India is going to have to come to terms with the next 5 years or so. And in the past, coalitions governments haven't been so bad in terms of growth. Now, my point to you is valuations could be a bit of a headwind for India. And that's been the case, justified, that, we have Modi 3.0 coming up. Now, suddenly you have a coalition government. Do you think those valuations become a bit of a headwind? Because we need to face this. We are trading at more than 20 times. A Chinese market that's expected, to bounce back, which it has done in the last few months or so. it's expected to grow at around 5%. And we discussed India and other emerging markets like China.
Yeah, absolutely. And as I mentioned, and of course, again, there is uncertainty with this new political shift that we're seeing, but broadly underlying the Indian economy are very strong and are likely to continue to be strong going forward. And that should make equities within India attractive to investors. And, we've talked about some of those fundamentals before. I mentioned India positioning itself to benefit from this manufacturing shift away from China towards other locations, but also, as we've talked about, very favorable demographic profile in India relative to China and relative to a lot of other economies, and particularly China. And so India has that favorable demographic back, and China, I think, is going to continue to face very long-term challenges that India is not facing, and again can benefit from some of that rotation. So I do think that India is well placed to continue to, we'll have to see how the coalition government evolves. But again, I'm looking for a lot of continuity within the policies, and I think.
So India is still the preferred market among emerging markets. So you got that right, Robert?
Yeah, I think exactly investors are looking at, and I think a lot of the question marks around China are less of question marks around India, and I think will continue to be a strong preferred market for global investors.
All right, Robert, always good seeing you, and thanks a lot for joining in. You're looking for continuity. You don't believe that the coalition government will be reforms or something that you'll be keeping an eye on. Thanks a lot for joining in, Robert. Wishing you a good day ahead. Well, for the time being, we'll slip into a short break. You come back, we'll focus on all the top stocks that are going to be in trade today. Stay with us.
Okay, for the better part of the last 24 hours, we have only been looking at the market, but let's also look at some stocks, and there are interesting ones, which could be in news today. First, happening now?
Well, that's right. They postponed it due to market conditions, and they were looking at a rough price of around 18 to around $21 per share. That's what they had indicated towards the end of May. And in terms of valuations, well, they were looking at a rather large number of around 10 to around $12 billion. So this is, pushed back a little. Not yet come out with the plan with what they'll do with this money. That going by the price band, it would be anything between 6,800 to around 7,800 crores approximately. So they did not yet come out with the plan, but the probability was they were going to use this money, they were going to incur in India. So that gets pushed back a little bit. I think, the stock could pull back a little bit because of this, but then anyways, we didn't know what they were going to use this money with. So the street wasn't pricing in anything on that front. So I think it gets back to tracking the normal fundamentals, aluminum prices, Novelis, EBITDA per ton. For the time being, a bit of a negative, but I think the market will look through this because anyway, they hadn't cleared out what they're going to do with it.
All right. Well, that's Hindalco in focus there, 6 3/4% lower. Now, well, more stocks with news flow. Vamakshi is here with that list. Vamakshi, morning.
Well, good morning. Let me first start off with RCF. The company has received notice for provisional recovery for NPK units from Department of Fertilizers amounting to almost 265 crores, and this is mainly on account of unreasonable FY20 to FY23. Shilpa Medicare, another stock on our radar. Its arm Shilpa Biologicals has filed its first drug master file of human albumin 20% with the US FDA. IKO Lighting also on our radar. Its arms IKO Solutions has commenced commercial operations from its Noida facility yesterday. Texmaco Rail has entered into a share purchase agreement with for almost 9 crores. PNB is looking to dilute nearly 10% stake in Canada HSBC Life Insurance through its IPO. Concord as well as Shipping Corporation of India will also be in focus. Both of these companies have inked an MOU. They intend to explore each other's infra as well as offer seamless end-to-end logistics services to customers under a single window. Apart from that, watch out for Bharat Forge as well. Class 8 truck orders have flown in. North America Class 8 truck orders stood at 18,900 units. This is an uptick of almost 39% on a year-on-year basis and 35% on a month-on-month basis. It is important to note that Class 8 truck orders have risen month-on-month for the first time since November 2023. So this bodes well for Bharat Forge. And lastly, let's also look at Angel One. A good strong update coming in from the company. Gross client acquisition stood at 8.8 lakhs, up nearly 15.8% on a month-on-month basis. This has risen month-on-month for the first time since December 23. They've also witnessed some market share gains as well. Equity market share as well as F&O market share has risen by 80 basis points on a month-on-month basis.
Okay, all right, Vamakshi, got that. Thank you very much for that list of stocks that we need to watch today. With that, let's also turn our because that's where at least crude is giving us some good news. We have Manisha joining in with the latest. Manisha, good morning.
Morning, Surbi. Thank you for that. Well, yes, the commodity prices have continued to decline, and overnight was even a sharper cut really coming in for many of these. You have the US dollar index, which is holding steady at about 104. This is ahead of the US non-farm payroll data. Well, that comes in on Friday, and the markets are waiting for that for direction for the future. But in the meantime, you have seen a very sharp decline come in for metals. So you have copper prices now trading at a 1-month low. Prices declined 2.5% overnight. Iron ore prices, after a 2% of cut, are trading at a 7-week lows right now. We saw gold decline 1%. Silver is down 3.5%. Crude oil prices, as you mentioned, are trading at a 4-month lows right now with a 1.5% of a cut overnight. And the crude prices are down by 7% over the week. But the OPEC and allies meeting, while they have talked about easing of production going forward, that would mean more supplies have been rising in the last 3 or 4 weeks right now. So that continues to put pressure. So everywhere that I look right now, after yesterday's New York market decline, Asia as well has opened on a weaker side for many of these commodities.
Okay, all right, Manisha. Thank you very much for that. We'll keep all of those cues in mind as well. Okay, time to welcome in Devin Choksi. He's joining us on the show this morning. Devin, always great to have you on. And very interesting times that we live in, right? With the market having to digest. I mean, the numbers from where they stand right now, it looks like, but it's going to be a coalition government with different dynamics. How much or how materially does that alter the sort of narrative, the course, the trajectory for the market, if at all?
Yes, very good morning. Well, giving some incredible ability to manage the relationships. I think he has demonstrated his ability in the last 10 years in global relationship management as well. I think it's time now for him to demonstrate these abilities for the partner relationship in the parliament. Should this particular relationship management take care of probably some of the harder reforms that he has always intended to could possibly what the street is looking out for. In my viewpoint, I think and one would like to believe that these 5 years, I think, is going to be a drive wherein the clean, sharper reforms will have to take place. And that's what I think the state is asking for. Should that happen, then I don't think that these numbers would probably affect us beyond a level now. Of course, I think the parliament challenges will continue, but I think that is something which this country is blessed with. I think we have to deal with, I guess.
All right, hi, good to see you. Well, Devin, you need to customize your portfolio according to the things to come. And as of now, the markets believe then maybe the consumption theme will get more importance than the capex themes. And maybe valuation-wise as well, there is some comfort over there. Names now deserve to be getting a higher amount of your money that you will be allotting to equities, or will you, still look at buying some of the?
Well, to me, the two sides of one coin. You first put money into capex, it results into a higher amount of disposable income in the hands of people, and then discretionary, non-discretionary spending takes care. Probably, I think they will have to continue with the capex program in the economy. And fortunately, I think the financial numbers on one side they have got a stronger GDP growth. On the other side, I think they already got, I think, the industry producing better results and putting in more money now into the system. And as a result of which, I think more amount of disposable income in the hands of people. The current GDP growth rate continues, then possibly I think we are going to see 12 billion in itself. I think would create an equivalent amount of current GDP. Equivalent amount of that GDP would be the saving, the investment going forward in 10 years. So I guess I think the consumption is a natural outcome of the spending that the government is doing, and there is no choice. I think they will continue with that. I think the consumption and the tax ratios keep on improving thereafter.
Right. Devane, I was sort of talking about PSUs this morning and a lot of questions because that's where most of the action has been, right? So how to navigate that space. And I thought maybe what happens is some of the sort of illiquid, not backed by fundamentals so much, just pure momentum, gains, bigger gains kind of stocks, right? And there are lots of them there, and especially the smaller ones. Sort of there is profit taking, and some of the larger more strong, fundamentally stronger names. I mean, there is action. So maybe I was talking about Coal India on one end, and maybe on the other end, names like a long cohort of stocks of that sort. Do you think that's the way to sort of look at this space, especially for our retail audience, Devin?
Yeah, Prashant. I think more importantly, over a period of time, you have learned over a longer period of time, I think it is a growth rate which determines the price earning ratio, the valuation. Suppose if you are growing the company at a 20% rate of growth and every 4 years the size doubled, then you are justified to give 25. Suppose if anything over and above that, whatever you give in the price earning ratio in this kind of situation, it is only due to the liquidity factor, which could be seasonal also at the same time. But the rational happens for a longer period of time, wherein I think it gets rationalized. So this is where yes, in a given situation, I think we have been seeing some of the PSU companies have been commanding the price earning ratio of 40, 50, 60, etc. So that rule stays. Whatever may be the condition in the market, that rule stays. Rule I really just. So I don't think that I think we should be getting carried on with it. Maybe some correction in the price earning ratio at this point of time in some of the PSU companies, where the earning growth is high, it becomes an opportunity for investment for sure.
You going to give us one name? One such name?
Well, I think maybe State Bank of India is balance sheet is getting doubled in 4 years time from now on. And we believe that I think this particular company is offering enough amount of growth opportunity for investing this time of period.
They've been always great to chat with you. A shorter conversation, but we'll have you back on for more. Thank you very much for joining us, Devin Chokshi. Perspective on things. We'll take a quick commercial break here. We are back. Neelkan Mishra of Axis Bank will be joining in to discuss the trends in markets, and of course, I mean, he's got to mean that sense and how that is likely to shape up. Most important. Stay tuned.
Welcome back. All Nitish Kumar is likely to reach Delhi by 11 or 12 noon today. And there is a bit of an uncertainty about how quickly the government formation will happen. How different will be the government's policies? Is there a downside risk to growth? Is there an upside risk to fiscal deficit and therefore inflation? And of course, what will be the nature of policies? For all these questions, someone who economy, as Prashant just said, Neelkanth Mishra, Chief Economist, Axis Bank and Head of Research, Axis Capital. Neelkanth, thank you very much for your time this morning. Well, first up, the WhatsApp University was swirling yesterday with guesses. Will Nitish Kumar demand Deputy Prime Ministership from NDA? Will he demand Prime Ministership from India? Is it government like today or tomorrow? What is the best guess that the market should work with?
No, see, frankly, I'm not a political expert, but what I can say is that even when parties negotiate, it is always with a sense of propriety. So if you have one party with 240 seats and the other party with 16 and 14 seats, it is right, because remember that the largest political party, as per parliamentary protocol, is invited, has to be invited by the president to form the government. And it's like there are alliance partners on this side, I think there can be alliance partners on the other side, which may also be willing to, sort of switch loyalties for ministerial positions. So when we see these kind of WhatsApp forwards and these kind of speculations among market participants, I think we're going well beyond our pay grade. I'm definitely going beyond my pay grade. I think what we need to just focus on is whether.
Well, even on fiscal deficit, there were doubts because the BJP is crucially dependent on not just Nitish Kumar but also on the Telugu Desam. A new state has been created and they were left kind of high and dry with Hyderabad and all its money going to Telangana. So there can be a fiscal demand from Telugu Desam as well. Do you fear a fiscal, largesse, either because of Telugu Desam or for some other reason, and therefore, an upside risk to inflation?
Well, actually, Bihar has also been out. So let's park that issue for half a minute, and let's just focus on what is. I mean, at the central level. So as important as the verdict itself and how it changes power balances within the central government is how the results are interpreted. Now, BJP or the NDA, then how is it that they did so well in Bihar, they did so well in Odisha, in Himachal, in Delhi? It's not that all the poor are concentrated in Maharashtra and UP. So as the party and the alliance partners assess what went wrong, when we ascribe everything to fiscal tools, not how political parties work, in my understanding, I think there is going to be discussion on whether a certain community voted in favor of the opposition and why did that happen.
Yeah.
And all of those, none of those analysis points me to the fact that there needs to be more fiscal spending by the government.
Actually, Neelkanth, I read the verdict exactly as you said. It is difficult to make a pro-poor argument, though some of the parties would like to. But definitely there is going to be one from these two big allies. And BJP is very crucially dependent on them. So, I mean, can we really park the state demand for the moment now?
Okay. Good point. Thank you for bringing back the point. So the state alliance partners, if you look at prior behavior, past behavior, they are generally they stay away from national level agendas. Their objective it tends to be how can, so if it is the Telugu Desam party, they do. Now, suppose the special category status is given and there is fiscal for what period? Some finance commission grants which become eligible. Guess what? The finance commission report is going to come out in October 25, and don't see why that should mean the July budget will somehow undo or not bring down the fiscal deficit target. In fact, with the RBI special dividend, there is scope for that 5.1% for FY25 to be brought down to 4.9%.
So is that still your base case? Because that's what the bond markets also assumed. We saw that bond rally after the RBI dividend. Your assumption, your best guess?
Yeah, because see, that even lower is how making it, bringing in a lot of volatility. See, if you get 1.2 trillion rupees more, 5 trillion rupees more than what you had budgeted for, what will you do with that? And remember that for FY24, the deficit came to 5.6 versus 5.8. Yeah. And it was partly because the dividends from the PSUs turned out to be better than what the revised estimates had.
Yes, I agree.
Is the PSU profitability dropping sharply in FY25? It is not. So, so frankly, there was a certain positioning. I think midway through the market, people had to unwind those positions, traders panicked. Lots of things happened.
So sorry interrupting you because I'm trying to get maximum questions out. Okay, now what will we bet on? That's what the market wants to know. There was a big drop yesterday. Is it already buy time? You see further lows for the market? And what is Access Capital recommending as buys?
Yeah, so I think the economy was and is doing well because the real estate cycle is, give or take a few other aspects. Well, you know what? The vote share of the leading alliance is the highest. If you think that people who vote a certain way are more likely to buy a house or whatever, even that hasn't changed. So the real estate cycle, I think, continues to run. The associated, and then there is the power cycle, right? So basically, after 7-8 years of underinvestment in power generating capacity, we need a lot of power capacity. So there are stocks which are associated with thermal power, whether on the mining side or on the production side, which corrected very. There is still heat. There is still need for air conditioning. There are markets where air conditioners are not available. The inventories have fallen very sharply given the strong demand. I think those in a couple of weeks the market will start focusing on those aspects again as they should.
Okay, that's interesting. Neelkanth, hi, morning. Prashant here. Just to go back to the point said that growth rates largely don't suffer because of coalition. We had the UPA era, but what is different is inflation. Inflation is higher now. We may be just looking at that 10-year period when inflation, of course, and there are so many other factors. So I don't know if there is any extrapolation to be made here. You want to make a quick
July budget speech, July 2004 budget speech. The finance minister said, Speaker said, the government of India cannot continue to work the way it did. Because remember, at that time, there was a regime change that the had been voted out and UPA had come in. And UPA, even today, is interpreting the verdict in the same way. So, but is that the right interpretation for the verdict? I don't know. I think so. And therefore, it is very unlikely that the NDA, which is retained power, and remember that getting 3-star is not happened for 60 years, and to be fiscal continuity. If there had been a change of regime, yes, I think the incoming party, in fact, it was part of their manifesto. They would have been being true to their manifesto that you start, expanding the fiscal deficit. Some of the promises by 1.5–2% of GDP in the first year itself. Those things may have happened, but I don't think that is what is very likely this time.
Okay. All right. We'll have to leave it at that. We are never out of questions for sparing time for us. Well, this fiscal question is going to be, 10 basis points. So bond prices were over about 1 rupee 25 paise lower. If the market were to come back to terms and say no, it won't be that bad, then stocks, PSU bank stocks can be. So today you have to give.
Usually sort of, a little later to react, but more measured as well as compared to equities. So we'll take keys. We have Kush Bora and Sudarshan Sukhani to discuss the here and now, what to trade, what positions to take. Stay tuned. Welcome back. 51 on the clock. Election results, of course, has also brought forward a whole set of views, right? And the street is watching all of this closely. A lot of foreign brokerages written, local brokerages are weighing in about what they think the road ahead could be like. You heard from Neelkant from Axis, but there's more. Sonal is here with that compilation. Sonal, morning.
Good morning. Thank you so much for diverse views. So let's get started now. Let's start with Jeffries first up, where they say that there will not be full majority coming in from the BJP, but their base case is that it will be a coalition government led by Mr. Modi. However, they say they continue to believe in housing-led capex upcycle, but the stock market will demand. They think that large cap laggards, they will offer the best risk reward. Going forward, they are overweight on private vehicles and auto OEMs as well. But they have cut their overweights on real estate. They were a big bull there on industrials and PSUs as well. Moving on to CLSA, now they have moved conviction to having doubt right now. They've replaced L&T in their India focused portfolio with HCL Tech on the back of this result. Private banks, IT, insurance and commodities are the preferred sectors. So exposure to Modi stocks, which are ONGC and Reliance, is limited according to them. But they fear a derating and expensive capex space and also prefer valuations of private banks. UBS says that after weak outcomes, something that was not expected, now investors will focus on government formation and the choice of Prime Minister, considering that the BJP does not have full majority now. Support growth now vis-a-vis ensuring macro stability and reform narrative going forward. But they remain underweight on India in terms of emerging market context. Morgan Stanley says that BJP is falling short of majority, but their base case is BJP-led NDA is likely to form the next government. And that's why they say that their medium to long-term views do not change so much. Slower change is the next big question, but they think that this is unlikely. They also say the focus will be on macro stability that has informed government policy. Will that change or not will be the next debate to watch out for. Bernstein says that they believe that the continuity of power is a powerful enough narrative to support the economy, so they are also not so worried. They retain their view of high single-digit returns, and also Nifty target is unchanged rate. They do not see an immediate material impact. They remain underweight on small and mid caps, but they remain overweight on financials, as he says that negative electoral results would lead to valuation correction, and that is something that they are worried about. They remain positive on financials. They expect industrials and select PSUs to witness a contraction of multiples, something that a lot of other brokerages have also indicated. MK says they see Mr. Narendra Modi returning as the PM, but they've switched from PSUs and capital goods to FMCG, and they say buy Indian equities if Nifty falls below the 20,000 mark. They go overweight on FMCG, IT, healthcare at the cost of industries now, and have also cut the Nifty target to 22,000 versus 24,000 earlier. Goldman Sachs, however, they remain overweight on India, but they favor domestic sectors and raise staples on likely rural support going forward.
Okay, all right, got that. Thank you very much. So different global views that are coming in, fairly mixed, but I think barring UBS is a big bet, and they have been very rotation, maybe limit, like CLSA is saying, limiting some exposure to the so-called Modi stocks, but largely perhaps this will be a dip that investors would want to buy into. That's the sense on the street. Let's quickly move on and get you some technical advice after yesterday's big slam dunk. We have Kush Bora joining in, as well as Sudarshan Sukhani. Gentlemen, good morning. So Sudarshan, I remember you saying that, wait it out, just let the event pass, and now that's happened. What are you doing today? Is it time to buy, or will you still be on the sidelines?
Good morning. See, the event has passed, but the markets need stability for any sense to emerge. So that stability will come once a government is either in place or there is a visibility that it's going to be in place. So I think there will be volatility. There's no sense in, muddying your sort of going into muddy waters and then trying to find out if volatility has subsided. Today, the markets are not likely to be tradable. What's the run? I think the clearer and trading would be much easier. For today, I suggest avoid the indices and focus on the stocks.
Okay, all right, got that. Sudarshan, will come back to you for your stocks, but let's get in Kush. Kush, what are you doing today? Yeah, smile on yours. But how do you trade the index? Part of the market, right? I mean, you have ups, you have...
Hey, hi Nigel. First of all, very good morning. I was listening to you a while ago, linking the the Indian government to a corporate. If I just could continue that analogy, perhaps one bad, and they haven't really come to fruition. So I think that's the reaction that we saw yesterday. Also, as someone wise said, one day that the fortunes really change for a company or a corporate when either the story changes or the storyteller changes. None of that has happened, at least for now. That's what it seems like. So I don't think anything's getting derailed here. It's just that the exit poll expectations were denied, and hence we saw the correction. I think this market will resume an uptrend. It's only a matter of when, since we don't have a clarity on exactly how the government will look like. The only point is that do you buy today or do you buy today? The levels go 21,000. On the downside, the 200 DMA will act as a support. 20 to 500, will be the first resistance band. 200 and 47,500 is the range that I'm looking at.
To carry the analogy even further, Kush, I think it's like the corporate where you have a couple of new independent board members that have been added. So now the MD and CEO really needs to manage these new board members really well to ensure the company keeps running smoothly, right? We'll need to take a very quick break. We'll come back and we'll figure out which stocks the gentlemen want to trade today. Coming back with that in just a bit. Welcome back. So, okay, what do you do in the market today? That's the question. Sudarshan saying, don't bother trading index, look at individual.
Well, it's a all buy list. That's assuming that a lot of stocks are worth buying today. Infosys is a buying opportunity. Buy with a stop under 1350. Maruti is another buy. Stop under 11,000. Chola Finance had a very decent day yesterday. Did not participate in the decline. It's a relative outperformer. Buy with a stop under 1160. And finally, Ashok Leyland, same relative outperformance. Buy with a stop under 190. But try to keep.
That's Sudarshan's list. Kush, let's come to you. What about stocks now?
Well, one is auto space. Colgate, obviously made the cut yesterday. Up 4% could continue for some time. So you should have that on your radar from a trading perspective as well, if you like. 2900, 3030 are the targets. 2725 is the stop loss. M&M, hasn't really seen that deeper cut. I think, this story will continue. 2650, 2725 are the targets to look at on the upside. 2500 is where a support zone comes in. So that.
Okay, all right. Gentlemen, we'll come back to you for more during the course of the day. Thanks very much for joining in. Rajesh Palviya is also joining us he's Vice President Technical Research and Derivative Analyst at Axis Securities. Rajesh, good to have you with us here. Thanks for your time. What do you do and what are the trades to take this morning?
Good morning, everyone. So we have seen across the board supply pressure in previous day. Nifty almost slipped below 200-day moving average. Bank Nifty almost tested 200-day moving average. VIX is at elevated level. PCR ratio is indicating we are in oversold trajectory. Technical indicators on near term is also suggesting that we are now on a oversold trajectory. So if Nifty manages to hold 21,700, 21,600 in this kind of volatile market, there could be some buying interest we can see in the market, as most of the stocks have tested their important support area on the medium term structure. So there is some pullback action we can see. Maybe first half an hour would be volatile, but maybe in later day we could see some recovery from the lower level. To play this up move, we are initiating here full call spread. 21,900 call option one can buy at 249, and on the higher side, 22,400 call option one can sell at 135. So that gives you cost of around 135 for this strategy. So bull call spread, 21,900 call option one needs to buy, and 22,400 call option one needs to sell. So your cost would be spread moves to 270 to 300 zone. One can book profit also. Major support area based on the put concentration is at 46,000. That needs to watch in next couple of trading sessions. If we able to hold this level, then there could be some recovery in Bank Nifty also. On the higher side, zone is now placed at 48,000. So that is the critical level to watch for next couple of trading sessions for Bank Nifty. On stocks front, I think FMCG is likely to continue furthermore buying interest in those breakout on the consolidation range. I think one can look to buy Hindustan Unilever for upside target of 2580 to 2600. Keep your stop loss at 2440. The second stock where we are focusing on the long side, that is Coromandel International. In previous day, there was correction and stock has almost tested 20-day moving average and shown buying action from those levels. So near-term trend is intact for Coromandel International. We are initiating here buy for this stock. Upside target we are 1360. Keep your stop loss at around 1270. One stock idea where we are focusing to short, that is HPCL in the Petro. Stock now slipped below to 20-day, 50-day moving average. There was short built up. We expect further more. So if it remains below to 500, one can initiate short in HPCL for downward target of 4.
All right, Rajesh, we'll leave it there and more with you during later in the day. So thank you for that right now. a lot of the focus will, of course, today be for market participants as well, what happens in Delhi, because, the next obvious thing is, of course, with allies. So this will take center stage. So I just want to quickly run you through some of the developments that you need to watch out for. So the NDA meeting today, 4 and other NDA partners will attend. The India Alliance, there was a press conference with Rahul Gandhi and Mr. Kharge yesterday, and they said that a decision will be made tomorrow about what next. That meeting is happening at 6 o'clock in the evening. The cabinet meeting is likely today at 11 a.m. The president will host a farewell. Chandrababu Naidu is holding a press conference at 10 o'clock in the morning. Remember, he called all media persons yesterday after the win was announced, but then he cancelled the press conference. He's going to do it today, this morning. And of course, congratulatory messages from around. Jitin Ram Manjhi will also leave for Delhi around 10. Chirag Paswan will also coming. So, as I said, all roads leading to Delhi leave for Delhi was noon. As far as Maharashtra leaders are concerned, Sharad Pawar is going to be in Delhi by 11. Will attend the India bloc meeting. Eknath Shinde will be in Delhi for NDA meeting. And of course, others from the India bloc. Uddhav Thackeray, by the way, is also likely to have Stalin, who will be in Delhi by 9:50 this morning. So, expect sound bites as well. That's the other point that we will get through the course of the day. Akhilesh Yadav, who of course has been the big champion in this election, will leave Delhi by noon. We'll follow, of course, a lot of this very closely in terms of how this goes on. But, the expectation, of course, is that this is going to be there's political continuity. The numbers show it, and there will be an NDA government which will come through. In what shape and form, how much give and take, will the cabinet composition change? I think those are things to see. Conrad Saldana is with us, Managing Director and Portfolio Manager at Neuberger Berman. Thanks very much for your time. Will FIIs, you've had a view on India. You've been positive, but broadly, FIIs as a cohort, they've been big sellers. Yesterday, for example, they sold about $1.5 billion. So one can make the argument that it's not as if FIIs have been buying. Locals have essentially supported the market higher at a broader level. So what is stay out? But just wanted your thoughts on how you see this entire scenario play out.
Thanks for that, Prashant. Like I mentioned, the FIIs have been sellers and they would come back if there was resounding victory. I think it comes down to fundamentals, right? So I think the folks who are overweight India and have exposure, a few select funds, I think they stay the course. But it comes down to valuations for a lot of us. When you're looking at it, I think, the election, in my mind, will probably be noise in a couple of weeks. But it's going to come down to fundamentals, and I think the infrastructure side has been a significant growth. You're seeing that in the GDP number, but also in the companies. The question is, what do you pay for it, right? And if you're paying triple-digit PE multiples, I think that's what keeps people away, especially in the context where they excessively discounted from a valuation standpoint, and that's starting to see that tactical move, seeing funds start to close those underweight positions. So, India was priced in a sense for foreign investors to come into India at this point, given valuations, and the elections may be taking a little bit of shine off in the short term, but it comes down much more than politics. In my mind, it comes down to fundamentally is...
Right. Hi, Conrad. Good to see you. Nigel on this side here. If I'm not mistaken, the total fund size is around $8 billion, and out of that, 20% is allocated towards India.
Yeah, the fund size is smaller given EM, and I mentioned last time to you, part of the selling you've seen in India is not because of India itself. For a lot of EM funds, we've seen redemption, I would say about $1 billion into India.
All right. And you're a bottoms-up investor as well. You've participated in various QIPs. You've been buying stocks in the open market as well. What do you do now? Because the headline index itself was down more than 5% yesterday, and individual stocks, well, they corrected more than 10% odd. will you be looking to get into, taking a bigger steady have? Given that we could see some bit of volatility, will you start allocating right away, or would you prefer to wait by, let the dust settle, and then you start getting in again?
Yeah, so Nigel, for us, we don't turn over our portfolio much, and so what we would do is probably where the exaggerated moves and fundamentally we find a lot more upside. That's where we're going to gravitate towards, right? And so incrementally, just adding to those exposures, we do have limit prices on these. Price gives us that 30-40% type upside. And as some of these share prices obviously have corrected 20% in a day, but for discipline on our entry levels and specifically in adding to the names, we already know and we own, and that's where you see us deploy capital into those. It's not going to be a blanket. Names that have gotten hit hard, let's start to buy them for a short-term trade for the next day or two. That to us is just super difficult to call. And honestly, we're investors, right? And I think it's better for the market dynamics, be longer-term investors here. And so we're going to pick stocks we own, we know, and where the valuations are supported in the downdraft.
So, Conrad, hi, good morning. I've been looking through a lot of these foreign broker notes that came in after the event yesterday. LSA and Jefferies getting a little cautious on the whole capex theme. I mean, for instance, Jefferies was very early on real estate and advising cutting back a little bit of that exposure, maybe in favor of FMCG and defensives. There are others like Morgan Stanley. They say nothing much really changes. They're not expecting the government, this new fairly split. Where do you stand, and what will your portfolio tilt be? And now I'm not talking today or the next month. I'm talking about over the next, say, a year or two.
In terms of the view, I don't think it changes overnight, right? I think part of the struggle we've seen, and maybe that's why the voter turnout and went the way it did, was that you're seeing this marginalization, right, at the low end. And we spoke about the K curve. So consumption has been soft, and especially as you go down the income level. So, they've kind of voted, right? And that's a message. So, yes, infrastructure looks great. It's a massive contribution to GDP, but you cannot ignore the other elements of it. And so I think where the disposable income is starting to get squeezed a little bit, we have to make sure that doesn't creep up into more the middle income levels. So for me to, yes, shorter term, the consumer staple names look defensive, but can you see that growth come back more sustainably? To me is the question. And so from, I think infrastructure still looks good. I think in certain pockets of it, maybe the spending was exaggerated. So there's less upside in areas like that. But I do think some of the price executing at, say, IndusInd Bank, right through their MFI business through Bharat Finance, they look well positioned also. So you've got businesses that are still attractively valued, that are growing well in this environment. That's where I would focus on versus taking major sector calls at the moment based on an election outcome. For me, it's going to be a continuation. We've had coalition politics. I can recall, barring the last two, and so I think that I think it just continues, and you gotta have a valuation discipline where a lot of these infrastructure related names, some probably with not the best track record ratings, right? And I think we need to start to come back to fundamentals and earnings versus just paying a massive money flow into re-rating.
Allow us some time. We're hitting the market opening now. Sudarshan is here. He's been looking at some broker notes, I believe, on a couple of different stocks. So that's
first one is Jefferies on financial. It says Indian finance risks from weaker majority for NDA, and it's evaluating on 4 aspects. First one is re-rating so far. Second, links to capex, capital market, rural and government policies. It believes there is a higher risk for capital market plays and PSUs than NBFCs and insurers. Jefferies has upgraded HUL to buy and target is 2,950 per share because it believes company has over past few years, and it believes government will likely adopt more favorable policy towards consumption. Last one is defense. CLSA has downgraded BL to outperform from buy, and target is 294 per share, and it retains outperform on HAL, and target is 4,007. Walk the talk for defense make in India and execute $43 billion order of India-made products.
All right, what you need to watch out. The Nifty showing a 200-point pop, and why not? We sold off 1,700 points yesterday, so some bounce will come. So yeah, there you go. 190 kicking off the day, about 22,000. That's good news. But holding. I mean, so far, Nifty Bank is up about 0.5%, 287 points, 300 points, 47,200 plus is what you have. Cap index, which is starting about 1% higher. The small cap index, again, will come up on your screen as well. So it's a decent positive start, and we'll need to watch what happens from here. And, a lot of stocks yesterday saw massive pullbacks, massive moves generally, and of course, massive pullbacks from the day's lowest levels. So again, I think a lot of focus there. SBI, the big mover on Monday, the big mover on the downside yesterday, opening absolutely flat, and so many other stocks.
Yeah, absolutely. I was just looking at the sector spread as of now. Obviously, FMCG is getting top billing. There's no surprise there, because that's the one consensus view in the market, that you need to increase exposure to staples. Beyond that, if we look at, and that's because of the fall in crude oil prices. I guess that's an immediate reaction. So the likes of a BPCL up about 3%, even ONGC for that matter is up about 3.5%. Coal India. So the larger PSUs are finding takers this morning with gains of about 1 to 2%. What else is moving? HCL Technologies about 1.7%. One of these foreign brokers has replaced L&T with HCL Tech. Just gives us a glimpse of the change in place after yesterday's mega verdict. So that's where the gains are. Look at some of the volume charts now, see what's moving up there. Well, guess what? There is an IRFC that's still popping up, 4.5% up. There's a NALCO popping up, 4.5% up. SAIL is higher as well. So, well, there is some buying in PSUs, no taking away from that. There were some stocks and news that Mamakshi was telling us about. Angel One's numbers look good for the month gone by. That stock's up about 6.5%. KC International just announced a third as well. And EQ Lighting, I think one of their plants is coming on stream today, 3% up. Some of these stocks also finding themselves on the upside. Overall, about 200 up on the Nifty, 22,000 on the board. And the mid-cap index is up off with Nigel, I guess, so slow and steady.
Well, that's right. You know, the stock that's taking a big hit from the Nifty itself is Hindalco because of uncertainty around that Novelis IPO. I'm reading a note coming in from Philip. They're saying anyway they're not factored in anything with regard to this IPO, so they maintain their neutral stance. So I think the stock was down 6.5%. Now it's recovered a little bit from the low point of the day. But I'm looking at politics, and Heritage Food. For the second day running, that's one of the top volume gainers. It's owned by Chandrababu Naidu. So that stock in fact is up close to around 5% as we speak. JSPL as well, you had news post-market hours that in fact has wrestled back that seat that he was sitting MP a couple of terms ago. This time on a BJP ticket, so that stock is question. You have Mr. Panda that has an affiliation to INFA, that's Indian Metals, so that stock as well up close to around 4% in initial trade itself. Notable movers, in phone idea, the stock pullback yesterday. That's one of the top volume gainers in today's trading session. On the flip side, Jaiprakash Associates, because of getting dragged to NCLT, well, that one's down 10% yet again. Equity value gets wiped away, so that's the reason why that stock's under pressure. Suzlon as well, down close to around 4% odd. From the F&O related names, well, you have ABFRL, stock is up close to around 3%. City Union Bank as well is higher in trade. On the flip side, NBCC, one of those stocks that actually had run up big time in the last couple of months, that's taking a pounding. It's down close to around 8% as we speak. Shant?
No, absolutely. And, it's 90 points now holding, but slipping as well. I mean, it's going to be that kind of market that, you're still in the process of finally kind of settling in and coming to terms with the verdict. The shock factor is out. with, of course, it's going to be a bit of a process. So 21,970 is where we are at. So FMCG, as Nigel mentioned, is really top billings. HUL is up another 4.5%. Dabur is up 3.6. And what else? Canes is up 5.6. I can't really see, except FMCG, I can't really see a trend per se. Imami is up 4.5%, but that's FMCG again. Angel One is up 3.5%. These are some of the big volume-led gains. Action Construction Equipment, Motilal Oswal Financial Services, Supreme Industries, volumes side. On the downside, the Adani Power stock is the top loser, 677. I mean, but of course, this is also a little bit of pullback because it saw Adani Power, of course, went up 14-15% on Monday. And of course, before that as well, leading up sales, these stocks have done very well. BHEL is down 7%, 229, 230. Again, one of those PSUs which has just gone berserk. Hindalco is down about 5%. We mentioned that. Cochin Shipyard was down 10 yesterday, is down another 10% this morning. So 1639 Cochin. Bharat Dynamics is flat out 10%. So these shipbuilders, right? I mean, Cochin, BDL, Mazgaon Dock. Mazgaon is down about 6.5%. So that's another one which is down and out. IRDA, who talking about some of these smaller PSU names which had runaway parabolic moves, seeing a bit of pullback here. And that's notable because that's from that sort of a railway sector. Garden Reach is another shipbuilder, 9% lower, and the volume sort of tick is there at the bottom of the screen along with the price, so you can see that. And SW Solar, Prestige was especially after the results recently, so that's seeing a knock as well. The Nifty is up just about 50 points now, which means from the opening levels we have lost about 100 odd points or so. Let's take it to Gautam Chachoria, who's with us. He's head of global markets at UBS. Gautam, good to have you with us here. Thank you very much for your time. One of the first to put out a note, sort of encapsulating your views on what's happened with the elections. But some time has passed. I'm sure you've spoken with clients at your end as well. So I just want to start by you giving us some feedback in terms of what you're picking up from foreign investors and how they are seeing, the results come in, and what does this mean for what they will do from here? Go on.
Sure. Good morning, everyone. It was a negative surprise, given how the exit polls came in, given where the market valuations were. The specific set of investors, there were foreign investors who had also lightened up a bit. But again, look, the broader foreign investor base is still overweight India, though the relative overweight is one of the lowest we have seen in many, many years. The feedback from investors overnight and coming through the morning is stones before really making up their minds. You will see some trades here and there. But the big thing on their mind is Modi forming the government with and third, ultimately, what they're focused is on reforms and growth. Whether there's enough policy momentum, and there is some view out there amongst investors that reforms might take a back seat or take time. But beyond that, some of the more obvious ones would the government push that if they form the government.
Gautam, hi, good morning. Been cautious in this market for a while, right? And maybe yesterday's event only cemented that view that you've had. The point, however, is that that dip, that stock prices aren't running away on a tear. Would that perhaps make foreign investors rethink their moves, their entries, and maybe in terms of just portfolio allocation, look at India again?
So again, question of time frame. Look, our cautious view was on a relative to emerging markets, what the valuations are implying, and obviously from a next 6-month perspective. Most investors we speak to, even overnight, looking for signals of reassured that the underlying growth cycle will continue. So again, look, will investors come back in a big way or not? That depends on policy announcements we see over the next month or so. There is enough appetite, intent, and I would say cash line deploy if they see the right signals.
Okay, all right. Hi, Gautam. Good morning and good to see you in. This is Nigel on this side. You know, the problem and what the market is fearing is this government has been a reform or policy-oriented government. And some of those policies will not push through. But you're all penciling in something either on the land reform that could have seen the light of day in the coming tenure, which now may get delayed?
So look, we've had 10 years of a strong majority government, and both land reforms and agri reforms were attempted even before and faced political resistance. So that was not a base case that will get pushed through. That will be more like an upside scenario that if the government had come in with a big majority, then there's a possibility they could have tried it again. But as you've seen, many of the reforms are also being pushed out in the sting land at some states. Labor reforms is being talked about because the parliament has already passed it. Now it's more about operationalizing it. But there are a lot of other stuff which doesn't necessarily require political capital, if you use the term, push to infrastructure, and to balance a possible need to do more spend for the poor or agri sector. Those things, how much political capital is required is worth debating, because we have seen reforms in periods where we had a coalition government or government with very in the core of it. So I won't be that pessimistic that we won't see many reforms which the market would have been expecting. But yeah, some of the couple of tougher reforms which require a lot more political capital, that we have to wait and watch as to how.
It has already taken a turn for the worse, and now we've got a red screen again. Nifty is down about 30 points, have been lost quite quickly. There's a lot of selling on the Adani Group stocks. Now, and of course, not just the bigger ones, which opened about 7-8% lower, but now, as in the smaller ones, but even the bigger ones. Adani Ports, for instance, is losing ground. Adani Enterprises down 4%. Adani Power, etc., are anyway down around 9 to 10%. So that's one lot. There's tremendous selling on something like an L&T, and this sort of speaks of whether, now portfolios will take a call of unloading a little bit from, a capex-facing, infra-facing name like L&T, move that money to something like Lever. Gautam, actually, let me ask you that. I mean, are you expecting bumper bazooka reforms that you mentioned were not your base case, but in terms of just the policy shift and the policy stance, are you really expecting a change away from capex, away from Atmanirbhar, Make in India, defense and manufacturing, to more populist, to more rural? Because right now the market seems to be trying to work with that. So therefore sell an L&T and buy a Lever. But will it be as simplistic?
Context. When you talk about shift in spending, is it a tweak or is it a massive change in spending pattern? Because the scale of spending required to, say, support poor or rural sector, unless we see extreme shift in spending stance, the scale of spending will not matter so much to change the capex part. Now, coming on the capex part, what the government has been doing over the last 2-3 years, a huge jump up in public capex. But the hope and ultimate idea was that this translates to attract private capex spending to start. And that's what many of the stocks also started pricing in, that private capex cycle in pockets, not necessarily in a broad way, but that's what should happen. Now, the important point to make here, and goes back to the policy statement, policy continuity, beyond markets, for capex cycle names, and even for economic cycle, the corporate sentiment is also very, very relevant, because most of the corporates we had spoken to before elections, they were not jumping into a big capex spend cycle. It's also they wanted the elections to get over and get policy stability and clarity. Now, the policy announcement which we see beyond market will also affect the corporate sentiment and therefore the corporate capex cycle. That's something which we need to watch.
Gautam, for those who are watching you, give us three published. I mean, nothing sort of which is not published. Three bets which one can confidently buy. I mean, actually, when you buy everything confidently. That you kind of hope it works out. But what you can do now to kind of, and then you need to make money in a week, but something you can buy and hold on to, amidst all of that, what is happening. Go on.
Look, again, depends on the time frame of investors, right? The near-term trade will be from the more expensive industrial cyclicals to, say, consumers or rural-term trade. But the what we'll say utilities and industrials, that's the long-term thing. But again, we have to be very careful right now about the starting valuations, because the bull market we've seen in the last few months has meant there has been very extreme valuation. So one of the things we have been sharing with our investors is look at valuation in the context of history, which percentile they are in. Look at where the earnings expectations are versus history and what's the delta there. And then try and pick and choose the right stock. So I can't talk about single stocks, unfortunately, on this forum, but that's the framework we are recommending our investors to look at.
All right. I just want to make a quick point. The market is just sort of, really all over the place. It's 5 minutes of market action this morning. The gap up made a high at 22,100. The low today, immediately after that, it was 21,791. And we are now back at about 22,500, right? So this is a serious amount of swing. I mean, if you just add up the, the open, then the sell-off, and then the rally, I mean, I think we've already swung some 600, 700 points, maybe more in the first 5 minutes of trade. So that's essentially what's going on. It's up 150 odd points at this point.
The screen is telling you what investors are thinking. They believe there's going to be that push for rural, which is the top gainer right now. You have Hero MotoCorp, two-wheeler maker, rural-facing theme out there. HUL, Nestle, you can quibble that maybe in fact some part of their portfolio is urban as well. But clearly these are the themes that are doing very, very well and they're outperforming. The FMCG names, Hero MotoCorp pulled that out. And who's selling off some of these capex-oriented names? Adani Group, yes, that could be other reasons as well that it's under pressure, what the market believes. But L&T is down. L&T sees some of the, some big selling and volumes are very, very high out there. So it appears as of now, the screen is telling you that shift from capex to consumption, at least in the near term, that seems to be playing out for the markets.
I think there is a lot of under ownership as well, right?
Yes, yes.
When we speak with so many people and we rarely ever hear buy Nestle or buy Asian Paints or buy this. I mean, that's been completely out of favor. Gautam, in terms of actual ownership data, do you have that? I mean, because I'm sure you look at that as well. For these, for this part, which is rural focused or the mass segment, is there heavy amount of under ownership relative to the index weights, respective index weights?
I won't say heavy amount of under ownership. For the foreigners, they have lightened up a little bit. Locals a lot more compared to historical levels. But I won't call it heavy. It's all marginal tweaks rather than heavy.
Okay. By the way, Prashant, luckily the swing right now is not 6,700 because the high of the day was 22,131. That's 22,050. I think you read it one extra zero over there. But yeah, I mean, who's even more volatile? But right now, we're basically swinging around in about a 350-point range with the Nifty at the equilibrium level of around 22,000 for the time being. Gautam, so finally, what would your advice be as this remains volatile? And look, this policy, continuity, certainty that we're talking about, I don't think we'll get that till the budget when, an official statement is made on the floor of the House. And that will tell us how this government, NDA 3.0, is thinking. So till we wait for that, clarity, what's the best way to navigate this market?
So I don't think we necessarily need to wait till budget, frankly. You will hear, you will get signals both in terms of headline communication from the, or if some alternate comes in, you will hear some comments. And also, I think the market will get signals from the appointment of key ministries, right? That will also be a signal of policy expectations. Look, the budget itself, I think there's broad agreement out there, even amongst investors, and based on past history, that you won't see an abandonment. But tweaks is possible, but whether there will be a major tweak where there is a giving up of the capex, I'll be frankly surprised if that is.
Okay, all right. Thanks a lot, Gautam, for stopping by and filling us in with your next guest then. Rahul Arora, CEO, Nirmal Bang Equities, who joins us on the show. Hi, Rahul. Good morning and good to see you win. Well, I think you would be a little bit of a happy trooper I think you all were cautioning your investors ahead of the event that it could work for you. But how do you approach the markets from here on? And you don't stop short of giving us levels on the Nifty. So in the worst case scenario, what could it be on the Nifty?
Morning has told you that when you get a kind of move that you do on Monday, you generally do tend to take. If people held on to their positions into the event, I think they did so at their own. I think the correction was overdue, needed, and healthy. The reasons could have been different, for sure. I think it's gone anti-consensus to the market, as I'm sure you've discussed till the cows came home since yesterday. But I think it has restored a reasonable amount of sanity into the market in the short term. I think sector rotation had already started in the market way before this. I think if you remember when I was on the editors roundtable about 3 weeks back, we had spoken season of any sector in India after a very, very long time. So on average, the market was about 250, 300 basis points technically underweight on FMCG. And I think you're sort of seeing that move to this party. It is a no-brainer now that the government will have a towards populist measures in the budget. In all likelihood, it does look like the current establishment will form the government. But again, then I don't think that's something to be worried about, because I think the RBI dividend, which was at 80,000 crores expected, was well in excess of 2 lakh crores. So they have that 0.3% fiscal deficit to play with. So net, I think whatever had to happen has happened. The high of yesterday, which is 223,333, I think, I don't see that being taken out at a very, very boring market over the next few days. The only shock, and you do not get an NDA-led government. And I think that could, I do not think that the market is prepared for that. If that happens, then all bets are off. But I think the market now has just assumed the fact that it will be a weaker, but led by the NDA. So I think all things considered, be ready for a cautiously.
Rahul, morning. I think you've just read my mind, because that was my question, and I kind of framed it in my head, and you just like took it out to sort of amble around for maybe 2 years. People are used to very quick gains, are used to every dip getting bought. Of DII money that we've got to use, that's the biggest cushion this market has.
So I think I don't think SIP flows are going to fall off a cliff. That is not the case I'm making. It is very possible in the interim that these numbers of 18 to 22,000 crores on average could potentially go down to an average of 16, 18. It is possible. I'm not ascribing a probability to it. But when you look at alternate investment classes, even today, Surbi, whether it's gold, fixed income, real estate, they don't really look as lucrative as do, right? And I think so from that perspective, India has already begun on a journey of financialization of savings via digitization. And I find that almost irreversible. It's good that, I think post-demonetization and post-COVID, a lot of the investors saying that age group of 18 to 25 are probably seeing this for the first or second time. I think it's a good thing to happen early on in your career. I think there could be a short-term, maybe 8-10% dip in the monthly SI, if at all, but I don't see any substantial derailment to that effect.
Rahul, morning. Sorry, what did you? I missed that one part. I heard early in your careers. Did you mean a shock like?
Boring market for a prolonged period of time, and then two.
No, but I think I completely agree, right?
Yeah.
What you see when you start, and I think it influences you a lot when people started, in the global financial crisis.
Absolutely.
Right? I mean, then you kind of.
Then you can take on anything, right? After you've seen the GFC.
Yeah, that's so. But then you're also kind of tuned to a particular kind of market. COVID and making, which is of course the latest generation of people who came in, they've only seen up and up.
Absolutely.
But I think we've not had, as Rahul said, a boring market for a long time. The last I remember a sideways market, and was painful, I can tell you, was 2010, 2013.
Yeah.
You know, the high, I remember 2010 high was about 60.
Yes.
That did not get taken out for 3 years.
Yes.
And then the rally, the Modi rally, was the first time when he began. It also coincided with that rupee crisis.
Yeah.
We hit, I think, 83 or something for the first time.
Yeah.
And October of 2030, that rally began.
Taper tantrum and the rupee issues.
And the rupee bottomed out, and then we kind of...
Say if you got in post-COVID, then you did see that painful period. But some investors, you know, and someone told me this yesterday, he said, Nigel, we have been invested for 5-6 years. So we saw the painful COVID period, and then we saw the bounce. So it's not fair to say that only we saw the beautiful period. And I think I'll take that on board as well. Maybe they didn't see 2004 like some of you all would have seen.
No, but
they've seen some...
COVID was a very quick bounce, Nigel.
Would you really call that as a bear market? I would not.
Yeah.
Right? Because it was, you know, 30-35% or whatever. And then there was a V-shaped kind of recovery. The last proper, in a way, a bear market was back at the global financial crisis. I mean, after that, we've not had one. And it's been, you know, whatever, 14 years or something more since then. Rahul, I don't know if you want to come in on the point there.
No, I'm just sitting on my days, Prashant, because I think we are the last domestic institutional equities house to set up shop in India and grow. And we did that. I remember watching CNBC-TV18 at that high was 6350. Early stages of me setting up this company, I have seen a Nifty fall from 6350 to 4400 3 times. And Prashant, you of all people would appreciate a fall from 6350 to 4400 is far more pain. Grown the business, we've seen the industry grow, and I think, Prashant, you know, a big round of applause to the investors in India. I think, you know, when we talk about industry sizes, right, we're talking about flows, you know, so loosely, but which industry in the world, you know, not even semiconductors, has grown from a 5 lakh crore market in 2016 to a 60 lakh crore market in 2024. That's the mutual fund industry in India, 12x. And if somebody told you in 2016 you'd see the kind of outflows and you'd still be at record highs, you would have scoffed at it. So, you know, when I talk to investors and they talk about FI flows, I was like, unko aana hai to aane do, nahi aana hai to nahi aane do. We've carried it till here, we'll carry it forward. Their loss.
Fair. And I think that's the biggest change, at least in our careers, that yes, we've had bear markets, we've had bull markets, we've had euphoria, we've had absolute gloom, doom. But the texture change over the last 20 years of having the Indian investor carry the Indian market on his or her shoulder, I think that's been the high point, at least of my career. But Rahul, coming back to the here and now, the here and now issue is when you start unloading off some L&T. But the here and now question, people have taken a very simplistic view saying, okay, immediately let's do that. Is that the right approach? How would you look at it?
So, Survi, I think let's try and be a little brave in this market. I think FMCG has had a good run. Valuations are not really cheap. You know, I think the chains like Imami have done a lot better post their results. I think they've seen a 30-35% move up. But I would actually start out venturing and buying public sector banks right now. You buy good companies in bad times. Balance sheets are clean, asset in control. We're heading towards an interest rate cut at some point this year. So I think the pressures on net interest margins will be well and truly behind us. Why not pick up you at what, 14-15% ROEs at one-time price to book post the correction. So let's be a little brave. I don't think sometimes, you know, following herd mentality can be counterproductive. Keep a little from the highs that we saw day before yesterday. If you start getting defense stocks 15-20% cheaper, start buying them. I think the wheels have been set in motion. Regardless of the eventual formation of the government, I don't think you can go back on the wheels that have been set in motion. Capacities are being set up, factories will come on board, orders have been placed, deliveries will be made, so earnings will follow. It is only a question of whether you're taking a 6-month view or a 3 to 5 year view. If you're taking a 6-month view, my portfolio would be Monday manufacturing, infrastructure, and cement.
Okay, all right, Rahul. Talking about painful periods, 2004, 2005. I didn't see that. I saw that 2009, 2014. When we hit that upper circuit, I was in the exchange, in fact, and I was quite happy because we had nothing to do for the next couple of hours or so. But, talking about that 2004 painful period, the volumes in the, well, they flattened out for the next 2 years. And, if the markets lose some kind of interest, volumes start dipping, then some of those exchanges, stocks, CSL, brokerage firms, they have seen a big surge in the last 12 months or so. How do you approach them?
See, Nigel, the way I look at it is, this is a market that's going to keep rising over every period of time. You have had events from terrorism to, biological issues to, train blasts. Everything has come and gone, but the market just finds a way to grind higher. Election results, you pointed out 2004. I don't think anyone was prepared for that verdict. It was my first election back in India. The India Shining campaign was at the top. But I think the depth of the market has changed so much, Nigel. And I think, at that point in time, impact costs was such a big thing. Today, no matter how big investor you are, you can't impact the price of a stock unless you're really buying the stock outside the 250, 300 also, in the BSE 250, 300. So I don't think drama to that effect. Yes, I see an impact on the primary market. That is for sure. I think fundraisers, primary and secondary issues could get pushed back because valuations have come off. So it's a great time if you're a promoter to buy back, so that back your stock. But I think other secondary offerings or primary offerings could see a little bit of a delay by maybe a quarter from here. But I'm not too concerned about volumes drying up in a material way. Just going back to the point I was making to Surabhi earlier, even today, alternate asset classes are not as attractive as equities. So there needs to be a very compelling case for that to happen, for them to be a shift of volumes from one asset class to another. And just on so what we've seen yesterday, I don't have enough evidence to make that call.
All right, Surabhi, just take a look at HUL. As we speak, the stock is up 6.5%, building on to yesterday's 4% gain. So the stock up 10% when the markets are seeing some kind of selling. And this giant has woken up after under, I think, 4 years or so, not moved to have HUL that's come back and come back in style. 65,000 crores of market capitalization in 2 sessions.
What I find a little, and I was reading, I think it was another consumer company, at 45 times earnings is pretty reasonable. I said, but that is essentially stunning, right?
Well, at least it's not trading at 70 times.
There is growth there. HUL and all, I mean, what kind of growth are we talking about?
5%.
But I'll tell you one more thing, like Nuvama note said today, that industrials, they start, that's why in fact you're getting a little bit skittish. So the arguments are on both sides. Growth, but some of these stocks in comparison to what at in the past, I think they were, they're a little bit more.
When we talk about volume growth for FMCG companies, it is, I think for some of them, and Mangalam will know better, but I think
we're still talking mid.
He was good, but we generally are, we're talking about 3, 4, 5, 6%,
exactly,
right?
Single digits.
You talk about QSR companies, look at same-store sales growth. It's in that low single digits. Even flat we've seen in some quarters, zero growth. So, Rahul, I don't know if you want to address that briefly.
A bittersweet moment, Prashant, almost an emotional moment to watch FMCG do so well, having started out as a consumer analyst myself. But since you're talking about volume growth, Prashant, I think if you look at the last 5 or 10 years, I don't think FMCG volume growths have compounded in excess of 5-6%. And for that, if the election result had not come the way it had, and I told you pay 45 times for it, you wouldn't. It looks like the onset of the monsoon is progressing well. Reservoir levels should hopefully, get filled up with that kind of rainfall that we're expecting. Hopefully, everything should add up. But always remember, Nigel, just going back to a point, you probably haven't seen this in your career, but Hindustan Lever 10 years between 250 and 300 rupees. You may remember this. And then when it broke out of 300, it headed straight to 3,000. It became a
2000 to
10-bagger.
2010, yeah?
Absolutely, absolutely. And in fact, your own promoter company, Reliance, spent 10 years in a consolidation and then became a multi-bagger after it broke. Some of these guys, when they move, the large ones, then there's no telling where it could stop and valuations become a bit unreasonable. I mean, you were discussing defense. We track it. We've been very bullish, but I'd be the first person to admit that the street had totally lost the plot in trying to do discounted cash flows for defense companies. I mean, when you get there, you know you are in a land of excess. Just talk, Prashant, I don't know if you've discussed it this morning on your show, but V-Mart Retail, V for Victory, that gets about 70% of its business from UPR, and I'm sure that should also be doing well, because if you're talking about bottom of the pyramid consumption, this is one stock that will probably land up reasonably sure that that's going to be up and above.
Couple of things, guys. I'm feeling quite young now. Prashant and Rahul, Nigel, you missed that 2000, 2000. So I'm feeling good, and I'm feeling like I'm the good luck charm also. The markets are good, they're going to do well from here, but markets are a teacher, and I'm sure they taught a lot of lessons, a lot for people who came after 2008, 2009 to learn as well. Young.
Thank you very much, and interesting pick there. V-Mart is up 6%. It's a rural-focused tier 3, tier 4, a retail player. It's a value retail player. It's been on the dumps for a long, long time. We've had the management many times with us, and they've been. I mean, I remember the last interaction after the earnings, quarterly earnings. They said that things are starting to look a little better. I mean, it was not any upbeat, very positive commentary, but. It's one of the few there in that value retail space. I mean, Zudio is there, but you've got to buy Trent at 100 times. So, this is something to keep an eye out on. We'll take a quick commercial break here. We'll have A.K. Bhattacharya of Election Verdict and Memes for the political economy. Stay tuned. Okay, welcome back. It's an interesting day. We've already seen, and not even an hour has passed as far as markets are concerned. Markets open, but we're down again for the second time. We're down again. Look at that sort of intraday graph, and it kind of tells you the story because people are, I think, grasping at straws. The big shock reaction is behind us, and I think that is very clear. Depend on sort of coalition partners in the real sense to form the government. There will be give and take. We've not had those kind of things for the last 10 years. So there's a recency bias as well, which needs to be reset. And I think some of that is happening as we speak. We have Mr. A.K. Bhattacharya with us, editorial director at Business Standard, and we have senior journalist Sanjeev Srivastava joining as well. Gentlemen, good morning. Good to have both of you here. Mr. Bhattacharya, Prashant this side, if I can start by you. Your column this morning is titled Governance Challenges for a Coalition. I can't read it because I don't have the subscription. I plan to take one. But if I can request you to begin there, what are your sort of big thoughts in terms of...
Well, I won't try to reveal everything that I've written because that is behind the paywall. But what I can tell you in brief is that the stock market is reflecting the kind of contentious economic reforms path. While there is no doubt that the welfarist economic approach will be continued, but key contentious economic reforms tasks that any government would have had to undertake, given the opportunities that lie ahead of this vast Indian economy, given the fact that this is going to be a coalition government, and not just a coalition government, a coalition government where the top leadership is not really used to giving and taking. So therefore, while the economic fundamentals continue to worry about is how well the new government will negotiate those turns and twists that are necessary to exploit the opportunities that lie ahead. One input that I would give you is that there is a crisis for a coalition government. And when I say economic crisis for a coalition government, the coalition government does exceedingly well as far as the economic reforms agenda of any economy is concerned. But whereas when there is a coalition, harsh economic challenges, then the demand for those reforms actually cannot be met very easily. So therefore, I do worry about this dichotomy of sorts, where the Indian economy, the economic fundamentals, to do well, but the governance, the political economy, the coalition politics will probably take a toll in terms of furthering the like India's should actually pursue.
So, you began by saying the welfarist approach will continue, right? A lot of market watchers that we've had on the program since the morning talk, the way it's put, the narrative which is put is that so far it's been very, very disciplined, and the risk actually is if you go the welfarist route, right? So how, is there a bit of a dichotomy there? Are we talking about something very large, extra, because of the coalition government now, or because, as you said, I mean...
The welfare schemes that have been run so far are riding on two basic fundamentals. One is that it is riding on a technology platform that makes the scheme's delivery less porous. That's number one. And number two, the government finances have been strong, and even though the welfare schemes have spread far and wide, the overall impact on the control. But remember that welfare policies also lead to addressing the consumption demand problems of an economy. Needs to attack the growing problem of one, jobs, and two, unequal growth, and three, the kind of uneven growth. My view is this, that the welfarist partially, this problem of demand. If the coalition government is committed enough to addressing the doubts and the concerns that the market analyst on your show must have expressed, will be less serious. We need to address the more basic of the Indian economy, which are not necessarily growth, but of jobs, although that is being driven by government expenditure. No, unless the government expenditure is supplemented by consumption demand and growth, which can encourage the private sector to release their animal spirits through higher investment, I don't see the problem getting resolved.
Absolutely, Mr. Bhattacharya. And I guess that remains a huge point of debate, because one points in the market for that. But we're coming to that in just a bit. Let me bring in Mr. Srivastava into the conversation as well. So, Mr. Srivastava, in your opinion, whether Modi can navigate the coalition well and run this like a well-oiled machine. We were doing an analogy with a corporate. If this is make sure that you keep them, in sync. So that part of it, whether you think that will happen seamlessly or not. And the second is any rethink or a change in the BJP's own economic policy. And if yes, then where will that tilt be? Your thoughts?
So as far as your analogy on independent directors goes, I can take it a step further. These are the independent directors which promoters can't change. Or they can't have a difference in independent directors so easily. So they have to sync with them. There are not many options on the table for them. Put it quite well. Mr. Modi will have to go back to, in a manner of speaking, class 1 of people. Because all through his since 2002, when he has been in power as Chief Minister thrice of Gujarat and twice the Prime Minister, he has had a very different style of functioning, which speaks of everything else but consensus building. So now deal with allies and deal with allies which are not just your crutches, they also become Elvis around your neck if not handled properly. It will require a completely, Mr. Modi 3.0 will have to be more like Mr. Vajpayee, if not Manmohan Singh. Manmohan Singh was too flexible. Mr. Vajpayee, the right mold of flexibility and firmness in things which mattered to him. Mr. Modi, if he has to run this coalition government well. And I know, I don't know, but I think Mr. Modi, behind this veneer or facade of Ekla Chalo Re and a strong man, is also at heart is a very pragmatic politician. Yeah. What is more important for him is to run a government and last a full 5-year term than to prove some brownie as to how strong man image he has and what kind of, If you take 2004 to 2014 to 2024, that would be, if you take last 4 decades politics, so this 10-year period can be seen as some kind of an aberration. Now so we have come back to normal days. And I think on one point which Mr. AKB was mentioning, I think having Chandrababu Naidu as one of the crutches is great because Babu is one very pro-industry, pro-growth, pro-economic reforms and, pro-development and all of that. And Nitish Babu will be happy with if he's accommodated and continued as Chief Minister of Bihar, and if Bihar is given a special status, so some doles will have to be given out, he'll have to be given. That will be another interesting thing. Both Mr. Naidu and Nitish Kumar can demand and get their pound of flesh in terms of ministerial berths.
Yeah, sure. I mean, the way the numbers are stacking up right now, I think at 292, there's still some, bargaining power that obviously the BJP as a single largest ally will have.
Not some,
a lot.
Quite a bit.
A lot. Absolutely.
Yes.
Take that point. So very quickly on the second element and also respond to what AKB was just saying. In terms of economic policy itself, the BJP's own thought process, will there be a shift? Because we've not seen that largesse on tax cuts. I mean, even just going into this election, there was nothing on personal income tax. There's been nothing on capital gains in terms of a reduction or GST or any of that sorts. Will we see that? Is that a realistic expectation to keep on the table?
For a middle and salaried class which is not investing in making gains in stock markets.
In the stock market.
The last 10 years have been the worst.
Absolutely.
You not just pay your 33 or whatever slab you are in, that kind of tax. Plus then you pay GST and pay taxes on just about everything extra. From the minute you get fuel for your car to your eating out in a restaurant or buying a car, booking an airline ticket, taxation comes to roughly 50%. So Mr. Modi and company may well think about it. I don't think they will think much about it. But what I disagree somewhere is I think this fear of going the welfare way a lot more aggressively is, I think, unfounded. Because nobody is deriving out of the results that more welfares would have meant more seats for the BJP. It's completely the takeaways and reasons for their not so bright performance are entirely different. So I don't think the welfare path will be walked upon with any great vigor or aggression.
Prime Minister Modi went back to the old tagline, "Sabka Saath, Sabka Vikas." There was a lot of talk of inclusivity, taking everybody along. So I don't know if the mass with you sort of an approach. Now, whether that mass is in terms of economic strata, whether it's different communities or religions or whatever, we have to see. But there's a clear note of that last night.
Take allies together.
Yeah,
that's
to begin with.
And one more point, talking about Vajpayee as well as the Modi government, what's common between them is Mr. Naidu as well as Mr. Kumar were part of that one as well. But as senior leaders at that time, then in the last 10 years or so, they went, into their own space. And now, in fact, now they're making a bit of a comeback of sorts.
Mr. Bhattacharya, if he is there with us, Mr. Bhattacharya, just any sort of last thoughts? Anything else you'd like to add with what we should expect? Packages. We had Neelkant Mishra with us in the morning. Andhra Pradesh and Bihar both have been talking about demanding special packages denied so far. I mean, that should be a given now, should happen. But in terms of
quick points, I agree with what Sanjeev mentioned about the need for tax rationalization and tax reforms, which you will remember that it was there even in the BJP's manifesto. So I do expect the tax reform agenda to be taken far more seriously now. That's number one. And number two, the coalition dharma, so to say, to be followed with the partners of the government, but also coalition dharma, inclusion and inclusive political management will be required within the BJP, in my view. Therefore, I do see the impact of coalition dharma not only impacting BJP's internal decision-making, but also BJP's decision-making with regard to the coalition partners. So I do see a different government led by the BJP carried out not just to its partners of the BJP, but also with the key players within the BJP who will provide leadership to this government.
Mr. Bhattacharya, one point is, so we are tracking markets and a lot of these consumer-facing stocks are jumping. I mean, they were up yesterday, they're up today. Back to some of what we were discussing, which is not welfareism, but maybe a little bit more focus on at the mass end. Now, Sanjeev, he said it's not a takeaway, that it's not as if if there had been more welfare, this would have been different, at least not right now. That's not the takeaway. But just your thoughts, could that come in what shape or form? Yes, go on.
My sense is that, yes, there may not have been greater demand for more welfare schemes, but definitely the citizens of this country, of this government. Now, and this is riding, as I said, on technology and a very foolproof delivery system. So there is, when the government in power realizes that of the various instruments that were used to mobilize greater political support for the party, the ones that may have worked against them will probably be less in use. But whereas the ones that had seen no opposition within and outside will need to address the welfarist concerns and welfare schemes far more imaginatively and far more effectively. Don't forget that the country's major economic challenge is not necessarily the way the GDP is expanding, the way the market participants are probably making more money. Remember that the last 5 years have seen the market participants do rather well. So therefore, the real challenge for the policymakers would be how do you ensure the challenge of reviving demand, which in turn will also revive the economic fortunes of large number of companies which are into the rural economy segments. So I think the government will focus in various ways on policies that address both jobs as well as the demand from the rural economy, and so that the overall the economy grows not just on one engine, which is the investment, but also on consumption.
Okay, more questions, but out of time, and we can maybe request both of you CNBC TV18. So that's the sort of discussion on the political economy front, which I think remains as important. This is the third or fourth move now we're seeing on the market. Nifty is up 150 points once again, so creeping up to today's highest level. Not there, but it's materializing. Nagaraj Shetty is with us of HDFC Securities with a quick check on the price action and in terms of trades, etc., what he'd want you to do. Nagaraj.
Hi, good morning, Prashant. Nifty has been hard, sharp volatility. We have seen big event passing through. Formation of long bear candles on the daily chart is indicating will have some significance over the period of time with regards to our support and resistance for the market. At present, 21,250 is going to be a strong support for the Nifty, which is out of the candle of the yesterday's candle around 2200, 250 is going to be a strong resistance. This 1,000 point is going to be a range for the market in the next, I think, 1 to 2 weeks. Still, that more clarity will come on the government and reforms as well as. So presently, some sector-specific movement is going on. I think institutes and PSCs are likely to bleed some more.
All right, Nagaraj, thank you very much. Quick sort of update there. I'll have you back on during the course of the day. We come back. Commodities. Stay tuned.
Welcome back. Well, let's go across to Manisha Gupta to get the latest from the commodity markets. Manisha, what are you tracking?
Well, thank you for that, Survi. When I look at the commodities overall as a segment, we've seen some profit
sticking with the month of June as it has begun. April and May were stellar months, whether you saw the energy markets or even metal prices and precious metal prices as well. But June has started on a weaker note, and these are the kind of losses that we have put on an intraday basis, as in sense of overnight. So the maximum declines really coming in for the silver prices. We're trading below $32 onto that one right now. Sharp cuts coming in for crude prices. Iron ore fell 2%. And in case of the soft industrial commodities as well, palm fell by 4%. You had cotton prices trailing by nearly 3% on the weaker side as well. So the overnight action in case of commodities has been weak. But this is what we've done on a week-on-week basis as well. So this is the first week of June, where as well you have seen sharp declines come in. 7.5% of cut in case of crude prices, 7% down for silver as well. Most of the metal prices trading anywhere between 4 to 8% on the weaker side. Steel is down 5% in this week as well. Cotton is down by 9%. Palm is down by started the month of June on a weaker note. That is as the markets wait for the US non-farm payroll data that comes on Friday. The dollar index, after declining to a two-week lows as well, seems to be stabilizing above 104 right now. And the data that we've seen come in from various markets, it's slightly weaker than what the street was anticipating, is what is weighing onto the markets here. So when you look at the iron ore prices, we're trading at a 7-week lows onto this one. There are signs of weak demand in China. And with everything that China has done, the inventories are still on the higher side. And China is talking about controlling steel output later this year because of the kind of weather that we are seeing, and going forward would be strong monsoon. So in that period, you have weaker demand for metals coming in that would continue to weigh in sense of a cyclical session there. Also, when you look at the crude oil prices, we're trading at a 4-month lows onto this one. The US inventories have continued to increase, and the markets do not like on what OPEC and allies in their June meeting have said, that they will continue to ease production cuts going forward. That means more supplies coming in from OPEC and allies. There are more supplies onto these markets as well. Apart from that, the gold prices also continue to decline after hitting a 24.50 of an all-time highs. We are trading at 23.20 onto this one. This one as well is seen a bit of a weaker stance coming in for the international markets. Also, when you look at the silver prices, we've continued to decline onto that one, trading below $30 an ounce. The high that we saw into previous week was above $32 as well. So from an 11-year high, we are trading at a multi-week lows onto this one as well. So silver prices also continue to decline. That's pretty much the case that you've seen for other metals and energy as well. Copper, for example, is trading at a 1-month lows right now. China inventories are the highest since 2020. The LME inventories seem to be building up. And after that run up to an all-time highs, there's a big amount of profit taking that seems to be coming in across metals as well. So from where I stand right now, overnight has been a weak market, and the beginning of June as well hasn't started so strong.
Okay, all right, Manisha, thanks a lot for that. Well, let's focus on Hindalco. The stock is a little bit lower, but as I said in the first 2 minutes itself, the stock could recover from the low point of the day. And why is that? Because the street hadn't priced in the Nobilis IPO, and we didn't know what the capex plans were as well. Let's run you through the piece of news. We woke up early this morning to news when Hindalco is saying that the Nobilis IPO is likely to be postponed, because of some volatility that we're seeing in market conditions as well. Just to recap, in May 2024, they had come out then, they said they're looking at an IPO of Nobilis. They're looking at offloading close to around 45 million shares. And the total valuation, equity valuation going by the price was around 10.8 to around $12.6 billion odd. You open there the debt that they have of around $3.4 billion. That will give you an EV of roughly around 15 to around $17 billion odd. What they would get by selling this 45 million shares? Well, they would get roughly around 6,800 to around 7,500 crores odd. The reason that the stock has recovered from the low point of the day is because many brokerages, and I have a Phillip Capital note as well, who's saying that they anyway have a neutral rating on the stance and they hadn't factored in anything from this Nobilis. And why was that? Because they were waiting for Hindalco to say what they're going to do with this money. That explains why the stock has recovered from the low point of the day. The markets are back to tracking the fundamentals of the company, recovery in ton, and relatively stronger aluminium prices for the coming year. Stock as flat as can be. But HUL, that's the star today. Star yesterday, star today. It's woken up after a lull of many, many years. Mangalam, our in-house expert, joins us to tell us more about that. Mangalam, what a move on HUL. 75,000 crores of market capitalization in 2 sessions. And the bulls are very interested now. Tell us more.
75,000 crores of market 4 years of not adding anything to the market cap. So that's the underperformance that it is undoing now, HUL. And we've seen long periods of underperformance for HUL backed by big moves on the stock as well. So it's just a cycle that one needs to catch it right. And Jeffries this morning has written a note saying that whenever in doubt, back the consumer staples king. So they've upgraded the stock to buy now, and they have a target of 29.50. The reason why they say that is are the reasons that everyone knows about it. One, the stock has sharply underperformed Nifty over not just the last 1 year, 2 years or 3 years, even the last 5 years as well. The company in the past has had its own problem as well, which is, severe growth and margin headwinds over the past few years. In fact, it grew slower than the industry despite being the industry leader out there as well. Now the belief is that with the underperformance coming together with reasonable valuations, and now the stance shifting as well politically, where, the new government will likely adopt a more favorable policy towards consumption and rural outlook looking a lot better, with perhaps the monsoons being a lot more normal as well as against what we saw in the last couple of years. All these factors with benign inflation working for the FMCG companies, and in that, of course, the street is backing the one which hasn't moved at all in the last 5 years, and that is HUL. Explains the sort of 13-14% move that we've seen in just the last 2 trading sessions. Just a caveat that despite this 13% move that we've seen in the last 2 trading sessions, in the last 12 months, HUL has just managed to move into the green.
Okay, all right, got that. Absolutely, it's the run to safety that's propelled it for now. Mangalam, thank you very much. That is the latest on the FMCG buying that we're seeing. By the way, Fitch came out with its observations in the big event as well. This is one rating agency that's saying that expect policy continuity after this move, despite the coalition government. They're still expecting a capex push. They're still expecting the government to move on the ease of doing business and also gradual fiscal consolidation. So they're not seeing any changes, is a short point. That's the view from one rating agency, that is Fitch. We'll take a break on that note, come back on the other side, and Andrew Holland of Avendus Alternate Strategies will be with us.
Welcome back. Well, select stocks are cutting their losses. HAL from the low point of the day has popped up closer on 3%. REC as well from the day's low is up closer on 2%. But the theme of the day is these FMCG. You have Marico as well, that's up closer on 7.5%. And Sun TV, we had highlighted this yesterday. Cash balance is there. They have the IPL franchise as well. And valuation-wise, there is support. And the kicker that's come in the last 24 hours or so is DMK. They have, continued their dominance in Tamil Nadu, state of Tamil Nadu. So that's another reason now the political uncertainty is out of the way for them. Stock is up in an otherwise wobbly market. Even yesterday it was up 2%. Andrew Holland, Chief Executive Officer at Avendus Alternate Strategy, joins us on the show. Hi, Andrew. Good morning and good to see you in. What are you all doing? You know, the verdict is not something that the street was expecting, but now we have that. A coalition government is what we're bracing ourselves for. How do you approach the Indian markets?
Yeah, I think we're going to probably just see how it plays out for the next few days, let the government form, let the kind of hopefully the business as usual in terms of policy start to play out. And of course, then you have the budget. So I think there's a few concerns around, those factors. What I would say is that, government spending on, defense, infrastructure, renewable energy, given, all the power cuts that, we have in across the country, it's not going to stop because there's, it's an alliance rather than it's a BJP rule party. So I think the market's overplaying it in that respect for some of these growth areas. That said, some of the valuations were a bit higher, but I think everything's getting tarred with the same brush, and I think that's where the opportunity will lie now. There are obviously fears of some populist measures coming through, but given the RBI dividend to the government, they do have some flexibility around that, and I still think they'll keep the fiscal discipline there. So I think if all of those things kind of happen, then I think the market will take that in its stride and move forward. But certainly that the market was enjoying is probably eroded away in the short term.
All right, and how are you positioned on the Indian markets? Andrew, you're not sounding too worried. You're saying maybe the premium valuation comes off a little bit, but there won't be any stopping been taken. There'll be continuity, which is positive. How are you positioning now in the Indian markets? If you have a long short book, if you could give us some color on that front.
Yeah, no, we're kind of dipping our toes in because obviously yesterday was a good day to do that, and today's obviously given us opportunities as well. But as I said, it's not. I don't think there's any aggressive in the views. I think we can take the next few days, let the market settle down, consolidate, and just let the politics play out in terms of forming the next government and thereafter. And I think the next few weeks will give us plenty of opportunities to get back in the market as and when we need to.
Andrew, hi. Good to be speaking with you. Interesting times we're in. So just tell us, what's the portfolio construct for you right now? I know you can't talk maybe too many individual stocks, but in general, I mean, what's the long side of long? And now after yesterday's moves and yesterday's sort of developments, what do you think is ripe for some shorts?
Yeah, it's obviously opportunistic at the moment because obviously yesterday we kind of looked at more of the defensive sectors, and if you take IT for example, you had those kind of benign job figures in the US, which means that interest rates cuts are back on the cards in the US. So these kind of sectors will play out, and of course mid caps and small caps as a whole might be the area where you'll see a little bit more pressure in the short term because, as I said, that premium has just been taken away and everything gets tarred with the same brush. So I think that's where we're kind of end up in terms of the portfolio stance at this point.
Earlier in the morning, Andrew, we were having this big debate on whether this is going to be a very different market now. Post-COVID, it's been literally a one-way move. A lot of people who've come in with money, and the same themes have just kept doing better and better. Are we in for a different market, one of those more boring, painful, long markets where, making money isn't that easy? Because that could deter a lot of the new young.
See, if you're taking this over the next few weeks, there'll be those concerns. But if you're taking, the next 3 years, which you should as a minimum for equities, then these themes will continue to play. It's not as though the opportunity in electronic manufacturing sector has gone away for India. It's still there. So, if the policies are there, to help encourage either foreign direct investment or local companies to take advantage of that, then that will continue. So, that's a long